Welcome back. You're watching The Money Show on ET Now. Now, last week, if you've been tuned to ET Now, you may have heard of the term account aggregator being thrown around. It's something that has been recently announced by the RBI via a virtual event. And as the name suggests, it's an aggregator. It's an aggregator of your and my financial information. It's going to do so to ease our lives, to make life more convenient, to make banking and other transactions more convenient. But let's get a holistic picture of what exactly this is, how will it work, and of course, what is the surety of privacy of your financial information, because that as well is something that's paramount. I have with me Adhil Shetty of Bank Bazaar to take forward this topic. Adhil, thanks so much for taking our time and joining us. I've given a very rough and brief skeleton of what roughly account aggregators are. But if you could explain to our viewers, what exactly is it? How does it work?
Let me just put it in layman terms, Mubina. So today, when you or I apply for a bank loan or a bank credit card, we have to go to the bank we have a savings account with. We need to get a copy of that 6-month banking documentation in printed format. Sometimes you're required to get a seal and signature of the bank where you have your savings account. And that paper, you then give it to the bank to which you're applying for a credit card or a loan. And that bank then starts processing it. The entire process could take 5 days. Now with account aggregator, right, this entire process will take 5 seconds. So you can consent in a secure fashion such that the account aggregator can move the data from your savings account bank electronically basis your OTP consent to the bank to which you're applying for a credit card or a loan. And the entire process is electronic and it's basis your consent. Now, that's how I would describe it in layman terms. But let's take one step back, right? What is the RBI doing with account aggregator? The RBI is doing something visionary. They're putting the control and the ownership of the data with the consumer. So the consumer will now have control to decide from whom to whom it has to go. And the entire process will be electronic and on the account aggregator framework.
Okay. So, if I could know what is, just give some examples of what is the financial information essentially that is stored with the account aggregator, and can I as a customer also pick and choose, what is revealed via the platform and what is not? Where does the account aggregator also withdraw information from and store it?
Right. So great set of questions. Let me just go one by one, all right? So the starting use case that we know of is that 8 banks have said they will integrate bank statements with account aggregator, of which we believe 4 are already live in production. So the first data set that we're talking about that will be available under account aggregator is your bank statement. Now, where is your bank statement typically used, right? Your bank statement is typically used when you apply for a home loan. When you apply for a credit card, you typically give 6 months bank statement. Your bank statement is also used in personal finance management to see where you're spending money, how much you're saving, how to save better, how much to put away in NPS, and so on and so forth. So the first data set that's being taken live, and the big announcement happened in the first week of September, pertains to 8 banks and bank statements. Now, obviously, right, we have more than 8 banks in the country. So this system becomes more powerful, like what Mr. Nandan Nilekani said, because it's a network. And as more and more banks come, it becomes larger and larger and more coverage is available to consumers. But let's come to the second question you asked, Mubina. The framework itself, the account aggregator framework, is not limited to only sharing bank statements via this consumer consent-based architecture. There is envisaged in this framework a future where you could also share your GST records, because GSTN, right, will soon be integrated and available for secure consent-based sharing of GST data. This could be extended one day, right, to your mutual fund records, to your pension records. And it's expected that as the system becomes consumers are more aware of it, as it becomes more widespread, that the use cases could extend from banking to insurance, to pension, to mutual funds, and that expansion will happen slowly and securely over time.
All right. So post opting for account aggregator, let's say, I want a personal loan from a bank. It could be some other bank as well. Let's keep it, for simplicity's sake, within the same account aggregator network. How quickly then will my loan be sanctioned? What will be the ease, of getting it done? And also, I assume then there'll be no need to do KYC, etc.
Good question, right? And the answer actually breaks into two parts. So one of the key elements in giving you a loan or giving you a credit card is to understand your income and banking information. So that is a prerequisite in most cases when someone gives a home loan, a car loan, a personal loan. So this will enable that entire process to get over in 5 seconds, right? And I'm using 5 seconds in terms of saying that the loan approval can be instantaneous. So as far as your verification of banking information or income information, it can be instantaneous. But let's double click on your second question. This does not change the need for completing KYC. So think of these as two independent processes. In order to give you a loan, I have to verify your banking and your income information. I also have to independently and in parallel verify your KYC. But now we're coming to a very important step by RBI, Mubina, which is KYC was already made digital and contactless by video KYC. And this really took off during the COVID lockdown, where at Bank Bazaar, we see, over 72% of consumers just doing their KYC digitally on video. You don't physically meet anyone. You just see someone on a video like you and I are doing right now, and the KYC completes in minutes. So the account aggregator is another step in the building blocks, right, to completely contactless access to credit, because digital KYC has already been provided for. It has to be done independently. Account aggregator allows us to now verify bank account information or GST information or provident fund information completely contactless, and it's a parallel step to KYC.
Okay. So the pro is essentially, of course, ease in banking, going paperless, video KYCs, etc., and you're conducting other financial transaction. But Adhil, just to be fair and to give both sides of the coin, do you see any risks, any downsides to this entire account aggregator framework? Any room perhaps for improvement as well?
Right. So let's start with why I think this is a good move from a system design perspective. Now you're creating a licensed entity, which is called the NBFC account aggregator. It's a 2016 license framework put out by the RBI, quite a visionary license framework put out there, where the duty of collecting consent from the consumer and taking data from bank A and giving it to financial institution B, the duty of securely managing consent and data transfers rests with the account aggregator, which is a strictly licensed and very strong emphasis on information security. So I think it's very good when information security and privacy and consent are moved to the network layer, because now the account aggregator network signs up to maintain information security, consent, and privacy. And that's a big deal, because the network, right, is something all endpoints have to work with. That's a positive. Now, that being said, right, I think in India, every month, right, or every year, information security and privacy becomes more and more important. So when we consent to an account aggregator to move information, we consent that the data is retrieved for a specific purpose. So the purpose of what that data is being retrieved for is being made clear by us. When that data reaches the endpoint who's processing the loan, that endpoint needs to maintain highest standards of information security and privacy, like, for example, PCI DSS or ISO 27001. So the endpoint has to meet those requirements. And the data, right, should be handled only for the scope defined. So I think information security and privacy is a constantly developing field. Every day, more attacks are coming up, more phishing is coming up. I think we all need to take this as a step forward, because the network is signing up to do a set of important issues. But it's very important, right, that India also comes out with its data privacy framework. All financial institutions maintain the highest qualities, all regulated entities maintain the highest qualities of information security and privacy.
Actually, you sort of gave me a precursor search to my next question, which was going to be essentially on the vulnerability of all our systems to hack attacks. Our systems have definitely gotten much more sophisticated, to the credit of all the hardworking members in the ecosystem, but unfortunately so has the criminal side of it. So I think you've largely answered that question. So considering it all, Adhil, should customers opt to be a part of the account aggregator network, just to sort of summarize the discussion that we've had so far?
Yes, I think the account aggregator network is an important step forward for the entire financial services industry. From actually collecting printouts of 6 months bank statement, getting it notarized, then giving it to someone, that entire process has now been made electronic and instantaneous. And I think it's much safer to work with secure data networks, right, than with paper documents moving from place to place. So yes, I strongly encourage, right, consumers to be aware of how this system works and make use of this system, right? Because I think that it removes the need for a lot of inconvenient and persistent paperwork and moves it electronically. Now, I think it's also important for the financial services industry to see this as a step forward. And I think Mr. Nandan Nilekani said it well. Now, we have 8 banks which have said they'll integrate, right? But all the banks, all the NBFCs, all the regulated entities, right? Mutual funds, provident fund houses, insurance companies, I think the network can grow because account aggregator was meant for all regulated entities. So I think we've taken an important step. And Mubina, that step took 5 years, right? This is a 2016 license that RBI brought out. In 2021 September, it went live. But I'm very happy that that first step has been taken. But it's now very important for the country, right, that this data architecture picks up momentum. What does momentum mean? It means more financial institutions integrate into it and more consumers are educated and start making use of it. So we're strongly educating and telling consumers, right, at Bank Bazaar that they should be aware of account aggregator and they should make of it to get their loans and credit cards much faster and much more securely online.
Okay, super. Well, it was not something that wasn't happening. It was already happening at Bank Bazaar via video KYC, etc. And now, of course, I think the RBI has also taken another step further towards going completely paperless and, of course, increasing the swiftness with which customers can conduct financial transactions, whether it's taking a loan or getting their credit card or debit card approved. Adhil, thanks so much for joining us today on ET Now and on The Money Show and simplifying this entire topic, getting our viewers as well aware of the pros and the cons and everything to do with account aggregators.
Thank you, Mubin.